Welcome back, and joining me for a look at the day's markets action is Robert Towell from Sasfin Securities. Thank you so much for your time, Rob. Quite an interesting picture that we are seeing there. I mean, we had been seeing the gradual weakening of the rand, but taking quite a knock today. Weakness of almost 2% against the US dollar, really trading dangerously close to that 18 rand level against the greenback. And I'm wondering what is responsible for this, especially considering the fact that our inflation figure actually cooled down quite nicely.
Yes, we had a good inflation print. I think on the petrol and oil side, it's helping our inflation quite a bit across the board. So that was positive and normally would be good for bonds. But really, I think it is, US elections and people expecting possibly if there's a Trump presidency, that inflation in the States is going to pick up, and you're not going to get that rate cut that people are expecting in the States to the same degree, and you're going to start to get inflation again. So you're starting to see US bonds weaken and their yields go up, and we follow in with that as well. So definitely, catching a cold from America at the moment on our bond side.
Well, actually, I mean, from the softer inflation figure that we did get locally, just talk to me about that, and really if it maybe changed your mind or your view in terms of what you expect from the South African Reserve Bank in its November meeting.
I think our economy needs rate cuts. I think our real rate is still relatively high compared to US rates. So our real rate is still relatively high. And I think it gives us, that with an inflation print like that, it gives us leeway to cut rates. The South African consumer is still under a lot of pressure. And we'll go into maybe famous brands numbers now, which looked okay, but really on the revenue side, revenue was actually down or marginally up 2%. So they're still seeing that there's not a huge amount of spend going through from the consumer. So I think that that inflation print should help the Reserve Bank cut rates later in November and December.
Yeah, it should help, but still in the reporting period, famous brands, you mentioned the marginal increase in revenue and then also growth in headline earnings per share, but really the company coming out and saying that it still was below expectations. How did you digest those numbers?
So I think a lot of these, especially in South Africa, some of the retail firms had very big costs for diesel, etc., in the previous year. And these costs have come out, which have helped the numbers on a profit line or operational level. So the operating profit was stable, but revenue is still not quite there yet. So we're starting to see inflation come down, which is good on the food side for the fast food producers like Spur and famous brands. But, the consumer is still under pressure. So, we've had one rate cut and the sentiment has definitely changed. The sentiment is more positive, but we're not seeing a total follow through yet from the consumer in their spend. We saw the two-pot system come in September. We saw about 21 billion get taken out of that, and mainly used for household debt and vehicle finance debt. So, people are still taking that money out and paying those debts down first before they start spending in the economy. So we definitely need that rate cut. And you can see it in the revenue numbers from famous brands that were just up 2%.
Very responsible, though, I must say, for South Africans to be starting off with their debt before actually spending. Let's go into technology group EOH, Rob. We did have the annual results from the company, a company that could soon be known as IOCO in the future. Of course, they did post still some softness in the revenue line. The loss did improve as well. I did see, though, that the share price surged 9%. Do these numbers instill confidence?
Yes, one of the few counters that was really in the green today at 8% up, or just under 9%. I mean, it was a very big turnaround. So if they improved their earnings by 99%, but still made a loss. So it is a very big turnaround. And if you take a look at how much revenue they're producing on the top line level, 6 billion rand revenue. So it still is a relatively big business in South African terms. And I think it's a very good set of numbers. I think they do need a name change now. And the new directors that are in at the moment are making changes. So it's the first positive number I've seen in a long time after many, many years of restructuring, many years of getting out of fines, paying fines that they've had to pay, and get out of deals that they weren't allowed to be in because of corruption. So it's taken a very, very long time to turn around. I think for the aggressive trader, you could probably go into it now. But for like a long-term investment, I still think you need a few more sets of earnings like this where you can see consistent earnings and positive earnings coming through. So it's looking interesting. I wouldn't invest in it just yet, but at least it looks like they've turned the corner for the first time.
All right. Well, a company that you would invest in, your stock pick for today, Rob, what are you choosing?
I think our market's come down quite a bit over the last week or so, and I still think South African banks, if you take a view on South Africa recovering over the next 18 months, are still looking okay. So, I think I've said it before that First Rand has been my top pick, and First Rand anywhere under 80 Rand, I'll be buying and adding to that position of First Rand. So anything under 80 Rand, I'll be adding to the First Rand position.
All right. Well, thank you so much for your time and for giving us the insights on what has moved investors' money today, Rob. That was Sasfin Securities' Robert Towell.